Hello everyone, a very good afternoon to all of you. Welcome to the class on the MCQs on RBI Circulars August 2025 month. Let's quickly start the session. So guys, what we'll be doing here is we'll be discussing first the MCQs, okay, that's our trend in the paid class. We'll be doing the MCQs first because many of you are already aware about the RBI circulars. At the same time, what we'll be doing is just after discussing the MCQs, we'll be taking circular in a detailed manner again, just after discussing the MCQs, right? So let's start. The good news is, guys, we are not having so many circulars in the August month, right? And in the September, as of now, I don't think any relevant circular has come up on the website, right? However, the bad news is when the circulars are too less, I can say in the August and September month, you need to go to the previous months. Why? Because ultimately there will be questions from RBI circulars, there will be questions from the finance current affairs as well. So we always need to be fully prepared, right? So here is the list of the August month circular. Along with that, we'll be covering some of the news as well. So today we'll be discussing about co-lending arrangements. We'll be discussing about the INR settlement in INR, right? We'll be also discussing about the special rupee Vostro account. We'll be discussing about the RBI Monetary Policy Committee meeting in a crisp manner. And at the same time, if time permits, we'll be moving to the check truncation system as well. Okay. Right. So let's start, guys. Let's start. The very first question for today. In order to streamline the co-lending practices among the financial institutions, the RBI introduced the CLA directions. These directions provide regulatory clarity on the partnership where regulatory entities extend credit to the borrowers. The structure is designed to simplify lending while ensuring shared responsibilities and risk. As per the direction, how many regulated entities are allowed to participate in the co-lending arrangement? Can you guys tell me? Everyone in the comment section, guys. This is the CLA guidelines. Co-lending arrangement guidelines, right? And what do you mean by co? Co means two, right? In the start of the session on YouTube, I told you co means two. So these are co-lending arrangement. Only two regulated entities can participate here in the lending process. Okay, very good. Perfect. So Aditi, Bhakti, Rahul, Varsha and Tanu, perfect. Option D, two regulated entities. Yes, John. Perfect. Two regulated entities here is the correct choice. Okay. So guys, this particular session is for both in the paid class as well as in the YouTube session as well. So don't get confused if I am taking some of the additional names as well. कि इनका comment कहाँ पे आ रहा है. Okay. Next question. Can you guys tell me from which date this particular co-lending directions will be effective? And I'm telling you guys, this particular co-lending arrangement direction is very, very important. That's why I'm taking both MCQ as well as the full-fledged rediscussion of this particular section. Right? We'll be rediscussing about each and every concept in the co-lending arrangement. I know that you must have seen the recorded video on the co-lending arrangement. Still, I'll advise you guys to watch today once again this particular lecture. A question can directly come from this particular circular, high probability question, right? This is a high probability area in which you need to work. And the correct choice is 1st of January 2026. So before 1st of January 2026, the existing regulations will continue to go. And on or after 1st January 2026, you need to follow the co-lending arrangement directions 2025. Okay, 1st January. The memory technique here is Happy New Year. Okay. HNY Happy New Year will be the memory technique for this particular circular. Okay, co-lending. So what you can do is you can just write the name of the circular and you can start writing the name of the codes as well, right? Memory techniques as well, that will surely help. Now, अभी थोड़ा सा किडिश लग रहा होगा, but just before the examination आप याद करोगे इन memory techniques को कि बढ़िया हुआ कि we have made the memory techniques, otherwise it will be very very difficult for us to remember so many dates and so many concepts. Now this question I think we have already covered in the finance current affairs session as well. Still, considering the importance of this particular circular, I am re-discussing this particular question. As per RBI guidelines on co-lending arrangements, aim is to promote the collaboration between different regulated entities for loan originating and funding. These guidelines apply to most and major lending institutions. According to these guidelines, CLAs are applicable to all the entities except which of the following? Except which of the following? Do you guys remember this question? I think in the paid class I was just yesterday only I was discussing this applicability related question. Why I'm taking it again and again in the paid classes? Because this circular is very very relevant and I don't want you guys to miss this particular circular. The correct choice here is option B, small finance bank, local area banks and RRBs. They don't have to get involved in the co-lending arrangement practices. Right? So they are in the excluded category. They are in the excluded category. Okay, perfect. B, not E. Okay, not E. Next one. A CLA is structured as a pre-agreed arrangement. There is a pre-agreed arrangement between two regulated entities to jointly fund the portfolio. And because this is a pre-agreed arrangement, we need an agreement. We need an agreement. This is also a high probability question. This is also a high probability question, guys. Please do remember here, ex ante is the keyword, ex ante agreement. Okay, ex ante agreement. Acha, can you guys tell me one more thing related to this particular circular? Tell me one more thing related to the particular circular. Let's suppose two banks, bank 1 and bank 2. They have entered into a co-lending arrangement. Okay, so they are about to give me the loan. They are about to give me the loan, let's suppose on 15th of January. On 15th of January 2025, they were about to give me the loan. What about 1st of January? 1st of January 2025. Is this ex ante agreement is required only on or after 15th of January? Or do we need to make it, or both these banks need to make it even before that? Even before the borrower came into existence. I am the borrower. I came into existence on 15th of January 2025 in this particular transaction. Can you tell me? These banks need to enter into an agreement before that date, or it is valid only after the date when they find a borrower to lend money actually? This can also be crucial. Would love to see participation from all of you guys. The more you participate, the better your learning experience will be. That's a direct connection. Okay. I have seen students getting selected जिनकी क्लास के अंदर बहुत ज़्यादा बात हो रही होती है. Okay. Before, right? Before, very good. Because this is a pre-agreed arrangement. Pre-agreed arrangement. So it doesn't matter if these banks are having the borrower ready or not. Still they need to do an agreement. At the time when they are entering into a co-lending arrangement, they need to do a ex ante agreement. Irrespective of the fact that whether they do have borrower or not. When the borrower will be there, then you will be doing the terms and condition analysis. There will be no time, right? Do it prior. So ex ante agreement is the meaning of this particular thing. Option C. Next one. Here is a case study based question. Okay, this is a case study based question. Please read it very carefully. IDFC Bank, and guys, even if you are not able to understand the circular, no worries at all. I told you the sequence. First, I'll be telling you the MCQs, expected MCQs from this circular, and then after discussing the MCQs, I'll be telling you the circular, I'll be explaining you the circular from the very scratch. Okay, so no worry, वीडियो के एंड तक बने रहिएगा. IDFC Bank in SBI entered into co-lending arrangement to jointly finance the SME loans. So there are two banks here, IDFC and SBI. They entered into a co-lending agreement. So इनने एक agreement कर लिया होगा, इसको क्या बोलते हैं, ex ante agreement, to jointly finance SME loan. So they will be jointly financing the SME loan, and this is co-lending arrangement straight. SBI Bank is responsible for sourcing the borrower, processing application, and conducting the initial due diligence. Right? The IDFC contributes the fund in agreed proportion. IDFC is also contributing the fund in the agreed proportion. Obviously, they are part of the co-lending arrangement, right? The agreement clearly specified that the bank will co-lend based on the structure. In this scenario, which entity will be considered as the partner RE? Because there are two REs. There are two REs, two regulated entities. One will be partner RE and the another will be the originating. Varsha, what is not clear? Can you tell me what is not clear? If that particular ex-ante agreement is not clear, no worries at all. I'll be taking this circular from the very scratch in this particular session only. These are just the expected MCQ questions, exam based MCQ question, because the whole purpose of doing this session is to give you an MCQ practice, right? So even if you are not able to understand particular thing, no worries at all. Later on, when I'm discussing the circular, I'll be discussing it again in a very detailed manner, okay? So no worries at all. IDFC Bank will be the partner entity and SBI Bank is called as the originating RE, okay? Because the loan is originating, the loan is being sourced from the SBI Bank. IDFC Bank is just the partner RE, okay? So this can also be one of the expected question. And again, I'm repeating, guys, even if you are not able to understand a particular question, not at all a big deal. I'll be doing this circular from the very scratch once I'm done with these questions, okay? So try to be with me, try to understand, even if you are able to understand 50% of it. I can understand if you haven't done the circular question, the circular video earlier on YouTube. So definitely difficulty aa rahi hogi, and not at all a big deal. Whenever I'll be taking the circular, in most probably 10 to 15 minutes, everything will be crystal clear only, okay? Now here we are having some of the statements. Which of the following statements are related to the borrower loan agreement under the CLA are incorrect? So what you need to do is you need to just identify the statements that are incorrect, okay? That are incorrect. The first statement, clearly disclose the RE's role. They are talking about the borrower's loan agreement. So we must have done a loan agreement with the borrower as well. The regulated entities must have done a borrower agreement loan. आप भी लोन लेने जाते हो तो agreement होता है ना, right? Clearly disclose each RE's role. So do I need to disclose RE's role? Both the RE's role? Yes, obviously. It's a combined loan facility, right? Identify single point of contact for the customer. Identify the single point of contact for the customer. Is there a need of single point of contact? Let's suppose the borrower is facing any kind of problem. He needs a person whom he can contact. Why? Because there are two parties, HDFC Bank, let's suppose, and ICICI Bank in the co-lending arrangement. Now this particular borrower, let's suppose I am the borrower. I'm having a confusion like whether to go for HDFC Bank or whether to go with ICICI Bank. So there should be a single point of contact. Yes, there should be. This is also correct. State grievance redressal process in case if this borrower is facing any issue. Who will resolve the complaint? Who will resolve the complaint? What will be the procedure? Obviously, it should be clearly stated. SOPs must exist. Any role change must be informed to the borrower in advance. Let's suppose I was the HDFC Bank was my single point of contact. HDFC Bank was my single point of contact. However, the responsibilities got changed and now ICICI Bank is the single point of contact. Now don't you feel that the borrower needs to be intimated? Obviously, option 4th is also correct. So none of the above. Option E is the correct choice. Very good, everyone. Very good. Right? So Aditi, Bhakti, John, Rahul, Satyarth, Tanu. Very good. Option E, none of the above is the correct choice because all the options here are completely correct. All the options here are, all the sentences here, statements here are completely correct. Okay. Next one. In co-lending structure, NBFCs are required to follow. Now you might feel it difficult because it's from the core part of the circular, right? It's from the deepest area of the circular. In the co-lending structure, NBFCs are required to follow strict accounting rules to maintain their financial stability. Let's suppose along with a bank, there is an NBFC as well. So they both are into the co-lending arrangement, right? This is the case. Now NBFCs needs to ensure the financial stability always, right? According to the RBI guidelines, what treatment must be applied to the unrealized profit, right? What is unrealized? That I haven't actually realized in cash. It is as of now unrealized. Now, in case if there is any kind of unrealized profit from the co-lending arrangement, how the NBFC will do the accounting? What do you think, guys? Now, this is from the core of the circular. Only those students will be able to attempt this particular question who have done this circular very well, right? Who have watched my entire video on this particular circular. If you haven't, no worries at all. We'll be doing it right now after these MCQs. Okay. So I can see so many correct choices from the paid batches. Atiti option D, Bhakti option D, Rahul option D. Okay. What about others? Satyarth option B. Okay. John is not sure. No problem at all. No problem at all. Any other opinion? So I can see that on the YouTube channel, I'm just getting one answer from Satyarth as of now, but on the live classes, I'm getting 4 choices as option D. The correct choice here will be, guys, the correct choice here will be option D, deducted from the CET1 capital. Why? Because this is the unrealized profit, right? So on conservative basis, NBFCs are required to slash it down from the CET1 capital or the net owned funds requirement until the loan maturity, or until I can say it becomes a realized profit. That's the requirement. That's the requirement of the circular. Now, no problem at all, even if you are not able to answer this question. Why? Because this is from the deepest zone of the circular. Okay. Next question. RBI's co-lending direction 2025 require a time-bound operational efficiency between the regulated entities. Once the originating lender disburses the loan, let's suppose SBI was the originating lender, it has disbursed the loan to the borrower. What should HDFC Bank do in that case? The partner bank. The partner RE is expected to promptly match its share. The partner RE wants to promptly now match its share, and that's what the bare minimum requirement here is, right? This commitment is meant to prevent funding mismatches. We don't want any kind of mismatches later on. Why? Because there are two parties that are involved here. In the co-lending arrangement, there are two parties that are involved here. We don't want any kind of mismatches and misuse of the co-lending model, because there are two parties. Whenever there are two brains, there will be some kind of mismatch, or there can be any kind of misuse of the model, right? The situation of two brains is always, I can say, a skeptical situation. As per the RBI guidelines, the partner RE must take its share on a back-to-back basis, and dash, you need to complete this particular sentence. You need to fill the missing part of the sentence here. Okay. Bhakti, Aditi, Rahul, John B, Satyarth B. Okay. What about others? Any other opinion, guys? Anyone? Any other opinion, or should I go ahead with B? Guys, B is the correct choice. Must irrevocably commit. Please do remember this keyword. Must irrevocably commit at the time of agreement. So there is no looking back once you are into the ex-ante agreement. There is no looking back. It's a irrevocable commitment. ऐसा नहीं कि पहले आप बोल रहे हो कि ओके चलो करते हैं co-lending arrangement, बाद में अरे नहीं मूड नहीं हो रहा. No, it's not like that, right? It will be a irrevocable commitment for you all, right? Next question. To maintain operational clarity in the co-lending, practice, each regulated entity is required to manage its share for the loans separately. Right? Keyword. I can see some of the students from the paid batch are answering directly without even reading the question, by just reading the keyword. That's great. And ensure that proper settlement mechanism is there. What mechanism is used to process all the transactions between the borrower and the regulated entities? So now we are having three entities here: HDFC Bank, SBI Bank, and the borrower. I am the borrower always in the examples. So don't you feel that there is some kind of mismatches that can arise, right? There can be some kind of conflicts. Why? Because there are so many brains involved in this transaction. And that's why we always use a escrow account, right? Escrow account. So very good, everyone. Tanu, Satyarth, Atiti, John, Bhakti, Rahul, very good. The correct choice here is D, escrow account. So here we need to use the escrow account to facilitate all the transactions between all the REs, both the REs and the borrowers. So all the transactions will be routed through a escrow account here. There will be a layer which is created here. Why we need a escrow account? We don't need to rely on a particular entity in this particular co-lending arrangement. That's why we need to use a escrow account here, right? Sir, what is a escrow account? It's nothing but an independent account, right? Now HDFC Bank will deposit its own share, SBI Bank will be depositing his own share, and they will be remitting it at once to the borrower. And whenever the borrower is paying the installment of both principal and interest, right? Obviously installment is having both the components, principal as well as the interest. It will again be routed via escrow account, and all the respective shares will be going to the different co-lenders here. Easy, right? Any queries here? Till here, any queries, guys? Though I haven't even started the circular yet, I'll be discussing the circular also, right? Because I want to make it a MCQ plus the concept revision class, or I can say the discussion class. All clear? All clear? Can you guys just mention in the comment section so that I also have the satisfaction that okay, समझ में आ रहा है आप लोगों को. In case of any query, you can always ask me. All clear? Perfect. Perfect. Escrow account is the correct choice here. Okay, escrow account is the correct choice here. Next one. So let's suppose one of the RE has disbursed the loan completely, right? So within how many calendar days after the disbursement of that loan, the partner RE should also record the transaction. There is a time limit. There is a time limit, right? It's not like that you can always keep on delaying the recording system. You need to record it within how many days? Within how many days, guys? Within 15 days, okay? Within 15 calendar days. Option A here will be the correct choice. Option A here will be the correct choice, okay? Next one. Under the CLA, the borrower is charged an interest rate that reflects the funding share of both the regulated entities. This rate is calculated as a weighted average of the individual rates offered by each RE. Again, a very simple question for those who have done this circular. ensuring that the costs are fairly distributed between them. What is the combined interest rate called? And I think I have covered this particular concept in the finance current affairs session as well in the paid class. The correct choice is blended interest rate. Blended interest rate. Okay. I'll be discussing this particular concept when I start with the circular. Okay. And I think most of the questions are already over. There are few questions left from this particular circular, and then I'll be starting the circular from the scratch. Okay. At the same time, I'll keep on telling you what can be important in the circular, what cannot be important, what can directly come in the examination. Next is the RBI co-lending arrangement guidelines have allowing the originating RE to provide a cushion to the partner RE. Why? Because this loan is being originated by SBI Bank, right? The borrower is in touch with the SBI Bank, so obviously SBI Bank must be knowing this borrower. It must have done the KYC as well, right? So at the same time, the partner RE needs a little bit of protection here. By protection is, I mean just a kind of cushion covering the portion of the potential losses. In case if there is a potential loss, at least the originating RE promises to compensate for that, and that's what we call it as default loss guarantee, right? That's what we call it as default loss guarantee. Default loss guarantee. So can you guys tell me the percentage here of the default loss guarantee? The percentage of the default loss guarantee DLG is 5%. Okay, 5%. So please do remember 5% here is the correct choice, right? Next one. A mid-sized NBFC and a commercial bank, they both have entered into a co-lending arrangement, right? They both have entered into a co-lending arrangement to finance the working capital need of the small manufacturing firm. So there is a NBFC and there is a commercial bank. Let's take an example of SBI. They both have entered into the co-lending arrangement, and as per the arrangement, NBFC is originating RE. So this is the originating RE. Obviously SBI Bank will be the partner RE. SBI Bank will be the partner RE, right? And the bank is the partner RE. While reviewing the arrangement, the NBFC, the RBI inspection team observed that the bank has fully transferred the exposure. The bank has fully transferred the exposure in a certain loan to a third party intermediary after the disbursement. So here what SBI Bank did is, let's take a case. The NBFC and SBI Bank, they both entered into a co-lending arrangement, and after disbursing 1 crore rupee, the share was, let's suppose 50-50%, say for example, the SBI exited the deal by transferring the loan to a third party. Which of the following statement are correct regarding the minimum share retention? What do you mean by minimum share retention? At least a particular percentage should be retained. There should be skin in the game, right? I again and again use the word skin in the game. So what is the bare minimum percentage for that skin in the game? It is 10%, right? It is 10%. And what should be the correct choice? The correct choice here will be option C. Both the REs, originating RE as well as the partner RE, must have must be individually retaining the share of at least 10%, right? So at least they need to show the bare minimum rate of 10%, right? If the loan is of 1 crore, let's suppose, so at least 10 lakh rupees should be the bare minimum that you need to carry, that the regulated entities need to carry. Okay, very, very important for your upcoming examination. Next one. So it can directly come, the percentage, or it can come in a case study based manner as well. So I have taken both the approaches. Right? Two regulated entities entered into a CLA to jointly fund a housing loan, with the originating RE disbursing the entire amount upfront. Due to operational delay, the partner RE took the share in its book after 21 days. I hope it's clear. यहाँ तक ही you must be able to answer. Okay, यहाँ तक ही you must be able to answer now. There was a originating RE, there was a partner RE, they both co-lended to a particular borrower. The originated RE disbursed the entire loan. However, the partner RE as of now haven't recorded this thing in the books of accounts. It has recorded in the books of accounts after 21 days. Is it permitted, guys? Is it permitted? Is it permitted? No, it is not. Right? It is not at all permitted. Why? Because you need to record the same thing. You need to record the same thing within 15 calendar days. So again, I'm telling you, sir, why are you covering the same question again and again? Because they can give you a directly the day limit question. That's what they do most of the times. But they can give you a case study based question as well, right? They can give you a small para relating to the co-lending arrangement and can ask you a few questions, like 4 or 5 questions from that particular para. So you need to prepare both ways, right? Direct as well as indirect approach. Next one. A borrower under the CLA defaulted on installment to the originating RE for more than 90 days. So the borrower has already defaulted for more than 90 days. Obviously, if somebody defaults for more than 90 days, we classify it as NPA. So the originating RE has classified the account as NPA. However, the partner RE has continued to show the exposure as standard. Right? Is it possible? Can you tell me which of the following will be the correct approach? Can you guys tell me which of the following will be a correct approach here, guys? If one RE has stated, the borrower as NPA, let's suppose HDFC Bank has declared me NPA, then can SBI Bank continue to show me as a performing asset? It can never be, guys. The same prudential norms you need to follow, right? Even if you are not aware anything, even if you are not aware about anything about this circular, right? Let's suppose you didn't study this circular. Still you can attempt the question. How? On the basis of calculated guess. You must have studied the NPA norms at least, right? And NPA norms are the same for each and every regulated entity. So how can it be different? For me, this is not even a question. Why? Because for me, NPA classification norms will apply. I will definitely classify it, not as per my own understanding, but as per the fixed prudential norms of RBI, right? I don't need any circular for answering this particular question. So don't feel pressured in the examination. I know there's too much of pressure, there's too much of stress, but if you think calmly, you can even answer those questions from those circulars, from those news that you haven't done ever, right? So answer will be option C. If one RE has declared it as an NPA, the another one should also do it irrespective of any other observation, right? You need to do it. Next one. In CLA, have a look. We are discussing so many questions just related to one circular, right? And in the part 2 also we'll be doing multiple questions because we are having a limited circular base in the August month. And RBI has a trend of asking more and more questions from the recent news and circulars. So August month, September month, July month will be the most crucial months for you guys, right? Now this is a direct question. We have already done a case study based question on this concept. This is a direct question. It's nothing but what should be the bare minimum proportion every regulated entity need to have in the portfolio, right? Yes, 10%, right? 10%. We have done a case study based question as well. So both ways it can come. High probability that they will be asking you these kind of questions directly, right? Still, they can give you a para based question and ask you certain question related to these circulars, right? So both the possibilities are there in the examination. So these questions, guys, were there from the Reserve Bank of India co-lending arrangement, and co means two parties, right? Let me just give you a quick example. When one regulated entity and the second regulated entity, it can be even NBFC, right? These are regulated entities. It can be bank, it can be non-banking, doesn't matter. They both are entering into an agreement. They both are entering into an agreement to fund this particular gentleman, right, Mr. Adani. So they need to make an agreement defining all the rules and regulations, right? That's what a co-lending arrangement is all about. And co means two, and here we can see that two REs are there, funding a single borrower, right? So two regulated entities jointly lending the borrower, and obviously they will be sharing the revenues, right? They will be sharing the revenue. Let's suppose the total loan amount is 1 crore. Say for example, I know that Mr. Adani is in no need of 1 crore. If it's 100 crore or 1000 crore, then it will be fine. But let's, for the sake of simplicity, assume 1 crore. 60% share HDFC Bank has given, NBFC has given, say 40% of the same. So 60 lakhs HDFC Bank has disbursed and 40 lakhs NBFC has disbursed, right? Obviously, if Mr. Adani is paying, let's suppose, an installment of 1 lakh rupee per month, say for example, they will be sharing it. So there is a sharing of loans, there will be the sharing of income as well, interest as well, principal amount as well, in the same proportion as prescribed, right? So don't we used to have a kind of guideline regarding the co-lending arrangement? Yes, we used to have a guideline, but it was more of related to priority sector lending. Okay, it was more of related to priority sector lending. So as of now, this is the full-fledged guideline combining each and everything. Most important thing, it will be effective from 1st of January 2026. This is effective from 1st of January 2026, right? That's the applicability. So till 1st of January 2026, you are good to follow the old rules and regulations, and after 1st of January 2026, you need to switch to the co-lending direction 2025. This date can be important. If you are watching the previous year question series as well, which I am doing on YouTube, you can have an idea that many questions directly related to dates are also coming in the examination, right? So the sad part of the story is we need to remember the dates as well. Okay. Applicability. I don't always tell that applicability is important, but here there is a twist in the story. It is applicable on commercial banks minus small finance bank. Small finance bank not applicable. LABs minus LABs, local area banks, minus regional rural banks. So these organizations are not required to follow the co-lending arrangement. Apart from these organizations, all the commercial banks can follow, all the AIFIs can also follow. There are 5 All India financial institutions in India, right? AIFI, NBFC, including the housing finance company. So NBFC plus HFC, they both are required to follow this particular circular, right? They both are required to follow this particular circular. Now you might be having a confusion ki sir, what is multiple banking, what is consortium lending, what is syndication? Because they are related terminologies only. Multiple banking, I'm having different bank accounts, I'm having different relationships in different banks. Okay, I'm talking about the relationships of banks, not about the personal life. Okay, so I do have multiple relationship with HDFC Bank, SBI Bank, with ICICI Bank, right? I have so many accounts, I'm taking loans from so many banks. That's called as multiple banking, right? I'm availing the services of multiple banks here. That's it. Consortium lending and syndication. Now you can get a confusion in the consortium lending and syndication. Here there are multiple lenders, lender number 1, lender number 2, lender number 3, and they all are combinedly, right, in a combined manner financing a particular borrower. That's what a consortium and syndication lending is there. But in syndication there is a procedural difference. In syndication, what we do is we appoint a one lead banker. Let's suppose there are 3 bankers who are financing, HDFC, ICICI and SBI, and we have appointed HDFC Bank as the lead banker. Now they all are giving their share to this particular borrower. Let's suppose me, I am the borrower, but there is a concept of lead banker. Right, the lead banker will be facing the client. will be having a one-to-one relationship with the client. Definitely all the banks will be enjoying the share, will be enjoying the income, but the lead banker is here to facilitate the transaction, right? To manage the entire loan process. That's what a syndication is. That's what a syndication is. However, in consortium lending, they all are coordinating with the borrower. They all are coordinating with the borrower directly, right? They all are coordinating with the borrower directly. So can I say that there is just a procedural difference? Now you can have a doubt, sir, how co-lending is different from syndication and consortium? Obviously it is different. In consortium and syndication, there can be multiple regulated entities, but in co-lending, co means two. There can be only two regulated entities. That's why I have taken a question. The very first question was related to co means two, right? Because it can directly come in the examination. Even the examiner is aware that the student must be confused between the concept of co-lending, consortium lending and syndication, right? Because these directions don't apply on the consortium lending, multiple banking or syndication. Okay, these directions are not at all applicable on multiple banking, consortium lending and syndication. Why? Because the main crux of the direction is co. Co means two. There cannot be multiple lenders. There can only be two lenders. Okay. Crux of this circular. It is even not applicable to the digital lending practices. However, if you are giving digital lending and two lenders are involved, again a co-lending is involved, then it will apply. Then it will apply. Right? Then it will apply. Ex-ante agreement. Why do we need a ex-ante agreement, guys? Why do we need a ex-ante agreement? There are two entities, HDFC Bank and NBFC. In order to avoid disputes, we always do an agreement. And here we call it as ex-ante agreement. Sir, what is ex-ante? Ex-ante agreement means a agreed proportion. A agreed proportion. Okay, what do you mean by agreed proportion? Okay. HDFC Bank will be contributing 60% of the share. NBFC will be contributing 40% of the share. Let's sign this agreement. Let's sign this agreement so that no disputes are there in the near future. How we will be sharing the revenue? How we will be sharing the risk? What if the borrower is not paying the money? Who will be sharing the risk? What will be the proportion of that risk? Everything will be there as a part of ex-ante agreement. It's nothing but a pre-agreed proportion. But in professional language, we'll be calling it as ex-ante agreement. And what is the ex-ante meaning? The dictionary meaning of ex-ante is before the event. Let's suppose, even if I don't have any borrower as of now, still both the regulated entities have to sign the ex-ante agreement. Why? Because this is before the event. अरे borrower आ जाएगा उसके बाद साइन करके कर क्या लोगे? उतना टाइम होगा क्या? कोई लोन लेने आ गया तो क्या करोगे? पहले उसको बोलोगे नहीं प्लीज स्टॉप, वी फर्स्ट हैव टू साइन द ex-ante agreement. That's not the case, right? You cannot keep the borrower on hold. You cannot keep the borrower on hold, right? Just give me a second, guys. Just give me a second. Just give me a second, guys. Okay, let's continue the discussion. So even if we don't have the borrower as of now, still what we can do is just sign an agreement. Just sign an agreement, right? You are going to do business, guys. So you need to sign an agreement. You need to sign an agreement. I think Varsha was having any confusion in the ex-ante agreement process. She informed me earlier. So I hope it's clear, guys. I hope it's clear now. Perfect. Perfect. So now two regulated entities are involved, so we don't want to get confused. So let's give name. let's give name. Let's suppose this NBFC is bringing the business. This NBFC is bringing the business. The borrower approached this NBFC. So this NBFC will be the originating RE. ORE, originating RE. There's nothing short form like this. Okay. There's no short form like ORE. Still, I'm just giving it for the memorization purpose, right? ORE, originating RE. Why? Because all the source documents, processes, loan application will be done by the NBFC. And the second regulated entity will be called as partner RE. Will be called as partner RE. Why? Because ultimately they are partners only. Ultimately they are sharing the risk and revenues. And obviously the loan can be secured as well as unsecured. Okay, so unsecured loans arrangements are also applied in this, right? Unsecured loan arrangements are also applicable in this particular thing. Every RE needs to keep at least 10%. That's the bare minimum retention you need to keep. So what do you mean by this? The NBFC or the HDFC bank cannot completely exit the arrangement. Let's suppose they both have given a loan of 100 crore to a particular borrower. Now both the entities need to have at least 10% of the loan, at least 10 crore rupee loan. They should be having in the books. Why? Because if they don't have skin in the game, they won't be interested in this kind of arrangement, right? So no two parties can take a complete exit here. They need to have at least 10% in their books of accounts. They need to have at least 10% in their books of accounts. Important. Directly can come in the examination. Directly can come in the examination. And I think I've taken maximum possible questions from this particular circular. Why? Because I personally feel that this is very, very important. Right? This is very, very important. Right? Credit policy. Now in your credit policy, each and everything should be stated, like what are the internal limits for the credit exposure, who can be the target borrower segment. It's not like that you are just giving loan to MSMEs, right? Each and everything should be clear in the agreement itself, in the credit policy itself. Every bank is having the credit policy. So you should be also having a credit policy. Both the REs should be having a credit policy. There should be a partner due diligence. HDFC bank should check the practices of NBFC. NBFC bank should check the practices of HDFC bank. There should be grievance redressal as well. Let's suppose if the borrower is having any problem, any complaint, who will be going to take that complaint? It should be crystal clear so that there are kind of no disputes later on, right? There should be no disputes later on, and that's what is being stated here in the guidelines. There should be a single point of contact, right? In case if the borrower is facing any issue, who should it contact? HDFC or NBFC? It should be crystal clear. Okay, it should be crystal clear. Any role changes need to be clearly communicated, and we have done a question as well. So that's why I'm telling you, on almost all the areas of this circular, I have covered the questions in this particular session, right? Then NBFC accounting related thing is also there in this particular circular. Let's suppose that the NBFC is having any kind of unrealized profit. It needs to be deducted from the CET1 or the net own funds. Why? Because that's unrealized as of now. That's unrealized. And the circular is clearly stating the fact that if you are an NBFC, you need to clearly deduct that unrealized profit from the CET1 capital. That's the requirement. However, I feel that if the question level is moderate to high difficult, then this question can definitely come in the examination. But if it is easy, then rare chances that it will come, right? So we don't know what will be the level of paper. I personally feel that it will always be a mix of every question, easy, difficult, moderate. So we need to prepare at that level, right? At the maximum possible level, so that we can easily manage the competition, right? Now let's suppose this particular loan is a PSL loan, priority sector loan. So no problem at all. Both the REs will take the respective share of the PSL. Why? Because all the REs need to fulfill their PSL obligation as well, priority sector lending obligation as well. So they can, what they can do is they can easily take their respective share as well. They can easily take the respective share as well. Blended interest rate. Now what is the concept of blended interest rate? Obviously HDFC bank must be charging some different rate of interest usually. NBFC from its clients must be charging some different rate of interest. Let's suppose HDFC Bank charges a rate of 10% on loans. NBFC charges a rate of 20%. And 60% of the loan is being financed by HDFC Bank. NBFC has financed just the 40% of the part. So can I say that we can compute a blended rate? We can compute a blended rate here. We can blend it. You just have to give the weights, right? So 10% ka 60% plus 12% interest rate, NBFC ka 40%. This will be your blended interest rate and it will be 10.8%, right? So both the entities together for this particular arrangement will be charging 10.8%, which is nothing but a weighted average, right? So जो quant में हम weighted average करते हैं वही यहाँ पे होने वाला है, blended rate, right? Again, the transfer of share, every regulated entity must record in its books of accounts the related share, right? They need to record this thing in their books of accounts, in their financial statement within 15 days of the actual disbursement, not later than that. This can be important. And the partner RE must irrevocably commit. Why? Because the client NBFC is bringing, right? That's why they are the originating RE. But the partner RE must also give a irrevocable commitment. एक बार अगर जो कमिटमेंट कर दिया तो फिर आप रिवोक नहीं कर सकते. दैट्स व्हाट द मीनिंग ऑफ इरिवोकेबल कमिटमेंट इज, राइट? यू कैन नॉट रिवोक योर कमिटमेंट. दैट्स व्हाट द रिक्वायरमेंट इज. एंड एवरी ट्रांजैक्शन विल बी रूटेड थ्रू द एस्क्रो अकाउंट. Every transaction will be routed through a escrow account, a third party account. So we don't have to rely on the respective counterparty RE. सर फेज 1 में आएंगे पैरा बेस्ड क्वेश्चन या फेज 2 में आएंगे? देखो जनरली फेज 2 में ही आते हैं, ठीक है? फेज 2 में आते हैं. देने में कहीं पे भी दे सकते हैं, पर फेज 2 के अंदर तो डेफिनेटली आएंगे, राइट? 2 मार्कर वाले जो क्वेश्चंस होते हैं मोस्टली आपके पैरा बेस्ड क्वेश्चंस होते हैं. ओके, बट वी नीड टू ऑलवेज बी प्रिपेयर्ड. कुछ फेज 1 में भी आ सकते हैं आपके, कुछ फेज 2 में भी आ सकते हैं, बट पैरा बेस्ड आपके जनरली फेज 2 के अंदर ज्यादा आते हैं, राइट? So guys, at the end of this session, okay, so there are few more points that we need to cover, plus I'll be giving you a summary as well of this particular circular, and then we'll be moving to the next circular if time permits. Reporting to the credit information company. How to report to the credit information company? HDFC Bank is having 60% of the share. SBI Bank is having the 40% of the share, so they will be reporting to the credit information company on their own, right? So it's not like that SBI Bank is asking HDFC Bank, please report my share also. No, you need to do a separate reporting. Please do remember this thing. And guys, one circular also came, I think 6 months back, 5 to 6 months back, related to your credit information company. This is also very, very important. Okay, credit information company. So again, you need to report your respective share to the credit information company. It won't be a joint reporting, it will be a separate reporting. Please do remember this concept. DLG, default loss guarantee. Because the originating bank is bringing this particular borrower, right? The originating bank is sourcing this particular borrower, so originating bank needs to take some additional responsibility of default loss guarantee. What if the borrower default up to 5%? The originating RE will be compensating the partner RE. The originating RE will be compensating the partner RE, maximum up to 5%. Maximum. Okay, please do remember this thing as well. It can also directly come in the examination, right? If one entity classifies it as SMA or NPA, then the another entity also needs to classify it, right? It's always based on the mutual consent and never on individual basis. And here are some of the important pointers as well for you guys, right? Here are the important pointers as well for you guys. So whatever I have stated, I have summarized it in 2-page summary. Okay, it's just a 2-page summary. In case if I missed anything in this particular 2-page summary, you can just add it. Here is the empty space, right? So one more news we can take, and then we'll be concluding this particular session. One more news I am taking, right? And then we'll be concluding this particular session. Tell me this one. The retail direct scheme was launched in November 2021, right? So there was a new feature which got introduced in the retail direct portal to simplify participation in the treasury bill. So recently they have introduced a new feature, right? Recently they have introduced a new feature. What was that feature? Any idea, guys? Anyone? The feature is auto bidding facility, right? Auto bidding facility. So very good. Aditi, Bhakti, Prachi, Tanu, very good. Satyarth. Option C, auto bidding facility. Plus you need to also be aware of the fact that there is a SIP facility also nowadays in the treasury bill. Okay, so RBI has permitted the systematic investment plan facility as well for the retailer via the retail direct platform, right? Via the retail direct platform. So here we can see that there is an auto bidding facility in the RBI retail direct platform and reinvestment in the treasury bill So now you can auto bid for the treasury bill. Let's suppose after one day the treasury bill auction is about to open. So what you can do is you can auto bid for it. You can place some automatic bidding facilities are there. You can place the direct trades on this particular RBI retail platform and the trade will automatically be executed, right? Based on the some parameters that you are already giving. So that's what auto bidding facility is all about, right? In the financial market. Plus what RBI did is they have standardized the procedure for the settlement of claims as well. Now let's suppose there was Mr. A. Now Mr. A is having multiple bank accounts in HDFC Bank, in SBI Bank, in ICICI Bank, right? Now Mr. A has multiple bank accounts and let's suppose unfortunately Mr. A is no more. So the legal heirs or the nominees of Mr. A needs to claim the amount from HDFC Bank, SBI Bank, ICICI Bank, n number of banks. But the problem is every bank is having different procedure for claiming the amount. So that's why RBI is working on standardization of the procedure for settlement of claims. RBI will be soon releasing a circular, right? So fingers crossed whether it will be released before the examination or after the examination. If it is released, I think anywhere in September month or October first week, we need to study it, right? We need to study it. So they will be soon releasing a particular circular so that the settlement claims should be standardized across all the regulated entities, across all the banks. But I don't think it will be a big circular for you guys. It will be a very straight circular, I can say. Okay, I don't think it will be too lengthy, right? And the second news is related to the auto bidding facility, and again I have given you the pointers here. Okay guys, and one good news for all of you guys, the RBI detailed notification is now out. Okay, so you can watch the video. I think it's already scheduled on 3 PM on Oliveboard YouTube channel. You can definitely watch that particular video as well related to the detailed notification of RBI, and the countdown is now started. So all the very best guys. This was our circular class. We have covered two major news here, right? One big circular and one major news, and rest of the things I'll be concluding in my next class. Okay, so thank you so much guys. थैंक यू सो मच फॉर अटेंडिंग द सेशन, एंड आई होप ये सेशन आपके लिए यूज़फुल रहा हो, मैंने आपके लिए कुछ वैल्यू ऐड की हो. अगर वैल्यू ऐड किया तो डेफिनेटली मुझे यूट्यूब पे कमेंट सेक्शन में बताना. दिस वाज अ पेड कम फ्री सेशन ऑन यूट्यूब एज वेल. ओके, फॉर ऑल ऑफ यू. सो थैंक यू सो मच. बाय बाय, टेक केयर. सी यू सून गाइज इन द कमिंग सेक्शंस, in the coming classes. Okay, bye bye. Thank you so much everyone. Thank you.